So, what happens when a massive flood of government cash ends up on a collision course with huge geopolitical risk? Well, in 2026, the stock market is about to find out. In this breakdown, we're going to unpack these two powerful forces and what they could mean for you.
All right, so let's get right into the core question here. There's a potential tidal wave of cash heading straight for the economy. Where is it all coming from? What are the big risks you need to watch out for? And, the most important part, where are the real opportunities hiding?
Okay, first up, let's talk about the bull case. It's all about what we're calling the liquidity flood. And the idea here is pretty simple. It looks like both the government and the central bank are getting ready to, turn on the money taps in a big way.
It all kicks off with this plan to buy $200 billion in mortgage-backed securities. Now, the official reason is to make housing more affordable by lowering mortgage rates. But let's be real, the side effect here is massive. It's like a direct injection of capital straight into the financial system.
And it doesn't stop there. On top of that big number, the 2026 tax reforms are looking to give the average American an extra $1,000 in their tax rebate. That is a direct boost to spending power.
And if you look closer, these aren't just your standard, boring tax cuts. They're super targeted. I mean, making your car loan interest tax deductible, no tax on tips or overtime. These are moves designed specifically to put cash right back into the wallets of millions of everyday people.
Now, this isn't just coming from the administration. No, the Federal Reserve is getting in on the action too. They've started up quantitative easing again, QE. That's basically their fancy term for printing money. So you've got two huge forces pushing in the exact same direction. And that direction is more money everywhere.
Okay, so a flood of money sounds great, right? But hold on, it's never that easy, is it? While all that cash is a huge tailwind for the market, there are some pretty big, scary clouds gathering on the horizon. So now let's flip the coin and look at the other side, the bearish case.
You've got the big banks, like Bank of America, waving red flags, saying their indicators are all screaming sell. But, and this is a big but, you have to look at their track record. The last time they made a huge call to short the market, back in April 2025, that was literally the bottom. So while we should definitely pay attention, maybe take it with a grain of salt.
And this right here is maybe one of the biggest warning signs: complacency. Everyone's getting a little too comfortable. This chart shows what's happening with the VIX. That's the market's fear gauge. And right now, it is the most shorted it has been in over a year. What does that mean? It means almost everyone is betting that things will stay calm and quiet. And that's exactly when you're most vulnerable to a sudden shock.
So, where might that shock come from? Well, look no further than geopolitics. It's a massive wild card right now. Prediction markets, which are basically where people bet real money on future events, are showing a greater than 60% chance of U.S. strikes on Iran by the middle of this year. Something like that, that would send shockwaves through the entire global market, no question.
And that leads us straight to energy. All these tensions are putting a ton of pressure on oil prices. You can see it here. Crude oil is coiled up like a spring at a really critical technical level. If it breaks out, maybe because of a conflict, you could see a massive spike in oil prices. And that's a huge problem for the global economy.
Okay, we've talked about the risks, but where are the opportunities in all this mess? We're going to get into that right now. By the way, if you're finding this analysis valuable, it would be awesome if you could just take a moment to hit that like button and subscribe to the Stock Market Mojo YouTube channel. It really helps us out.
All right, so we've got this puzzle, right? On one side, we have this huge bullish wave of money. On the other, we have these scary bearish risks. So what do? Well, we start hunting for what you call asymmetric opportunities. These are the plays where the potential reward is just way bigger than the risk you're taking. Take AI, for instance. The game is changing fast. It's not just about the big names you heard about first. Look at this. Google's Gemini has gone from just 5% of AI traffic to over 22% in just 1 year. That's insane growth. It tells you the AI story is far from over, and maybe, just maybe, the next big winners are the challengers.
So the trick here is to stop thinking about broad themes and start looking at specific companies with great setups. You could be looking at a healthcare innovator like NVO. They've got a new drug approval and a deal with Amazon. Or what about Apple? It's been beaten down, it looks oversold, and here's the kicker. It doesn't have that giant AI spending problem that's scaring investors away from other big tech names. You can apply that same thinking to rock-solid consumer brands or payment companies.
But maybe the most fascinating idea floating around right now is this concept of a second wave of AI.
Jeff Bezos put it perfectly. He said, AI is becoming a basic utility, just like electricity. And that's a brilliant way to think about it. But it also makes you ask a really important question. What's going to power all this AI?
The answer? Energy. A mind-boggling amount of it. And this has given rise to a whole new investment idea, the AI energy boom. All that computing power AI needs is suddenly putting a huge spotlight on energy and infrastructure stocks, a lot of which have been totally ignored for years. We're already seeing some of these stocks start to break out. It's a completely different way to play the AI revolution. Instead of buying the AI companies, you're buying the picks and shovels, the power plants, the grids, the stuff that makes it all run.
All right, we have covered a ton of ground here. We've talked about the flood of money, the scary geopolitical risks, and some really interesting new opportunities. So let's wrap this up and boil it all down into a simple, actionable game plan for 2026.
So here's a 4-step framework to think about. Number 1, you have to acknowledge the liquidity. That wave of cash is powerful and you don't want to fight it. Number 2, respect the risks. Don't get complacent. Number 3, hunt for those unique opportunities. Look past the obvious stuff, maybe into areas like those AI energy plays we just talked about. And finally, number 4, with fear so low in the market, think about a hedge. It's like buying cheap insurance for your portfolio just in case things go sideways.
And really, this is what it all boils down to for 2026. It's a tug of war. You've got this flood of money trying to push everything higher and this wall of risk trying to drag it all down. So the final question you really have to ask yourself is this: is my portfolio actually ready for that kind of volatility?
So there you have it. That's our breakdown of the massive forces that are set to shape the market in 2026. For more deep dives just like this one, make sure you subscribe to the Stock Market Mojo YouTube channel. Thanks so much for watching.